Welcome very much this lovely sunny morning. You will notice that I am joined today by the wonderful Gerard Turvey, MD at Nest Management, and also by our lovely guest today, Jennifer Priestley, who is MD of Maple Accounting. So, guys, listen, we wanted to come to you today and bring you our roundup of the autumn budget, which many of you, I've actually seen many articles come out now with their own variations of a roundup, bullet points, but we wanted to bring something that was very specific to this industry, very specific to you guys and what these changes mean to you and if they have any impact on you. So we wanted to bring the best to you. We wanted to bring you an expert in this field. We have known Jenny for a number of years now. You've worked with many of our clients, Jenny, and you've actually been in accountancy for well over 35 years, so very seasoned and expert in this area. From what I know of you, and please correct me if I'm wrong, the reason I think our guys resonate with you so much is because you explain accountancy in a real world way that's relevant to our industry. And you're very much the supporter of the underdog in a way. You really look out for our guys, and I think we really appreciate that. So I thought it was important to bring you onto this webinar and get an understanding from you of what this means. So I think the format for the session is Jenny, you're going to give us a roundup of the budget, and then we may have a little discussion after that, maybe Gerard's comments on that, and then Gerard, you've got some comments on performance from 2025 and moving into 2026, budgeting recommendations for our guys and for the industry as a whole. So Jenny, welcome. Thank you so much for joining us, and I will hand over to you.
Thank you. Thank you very much. So thank you for those kind words. Yes, I've been in accountancy all my working life, and my speciality is tax and helping my clients to pay the right amount of tax. Over the past several years, we've been looking after the martial arts sector, and we advise large franchisors to the smaller owner-managed businesses. Gerald's asked me to give you an update on the recent budget and its impact on business owners, and in particular the martial arts sector. So firstly, if we can have the first slide up, Ella. The first one, we'll look at the national minimum wage increase, income tax thresholds, tax on dividends, tax on savings, tax on property income, inheritance tax, the so-called mansion tax, VAT, which I know, and capital allowances, and a bit on LLPs. It's just the headlines. I'm more than happy to schedule a call to discuss the impact of these changes in respect of your own personal circumstances. So, national minimum wage. It's another huge increase since its introduction. And whilst many employers and business owners alike favour the proposed increases to reflect the cost of living, it's a bit of a double-edged sword. It's a steep challenge for the smaller business owners to afford the increases, especially with the severe cost pressures you're all facing. And then it follows the national insurance increases in last year's budgets, whose impact is just really now starting to be felt. It will have a knock-on effect for other employees. They'll all want to have a pay rise as well. So the rates will be, if you can press the button, for £8 for under 18s and apprentices, 18 to 20, £10.85, 21 is £12.71. The 18 to 20 has seen the largest increase. Moving on to income tax thresholds. So the tax-free allowance has been frozen now since April 21, and it's going to be continued to be frozen till April 2031. In fact, it only increased by £70 in April 20, when it went from 12.5 to 12,570. By freezing these tax-free allowances and the tax bands, it causes something called fiscal drag. What that means is that more taxpayers' income, as they get pay rises and through inflation or make more money, is being pulled into the tax bands, making everyone feel worse off. The OBR, the very same organisation who released all the budget announcements early, have said that by 2031, everyone will pay an extra £1,000 in tax. And for those in the 40% tax band, it will be an extra 5k on income of £25,000. It also stated that if personal allowance had been moved up in line with inflation since 21 until 2030-31, then the basic rate would be 4,900 higher, and the threshold for the high rate cap tax to kick in would be £20,100 higher. The freeze means that the proportion of taxpayers paying either higher or additional rate of tax have increased from 15% in 21-22 to 24% in 2030-31. And it's been calculated that someone earning 50k a year will pay £8,165 more in tax as a result of this freeze by the end of 2031. This measure alone will bring in 67 billion by 2031. That's 67 billion. So by doing nothing, she's actually pulled us more into tax. So the rates will be for the tax-free is 12,750. Basic rate 37,700. High rate 37,701 to 125, and then additional is anything over 125. The worst amount of tax to pay, is really around that £100,000, because then you lose your personal allowances and you start also the impact of the child benefit is also felt. So moving on to tax on dividends. So from April 26, we've got a 2% increase in the basic rate and the higher rate of tax. So if you want to press the button and show the amount, Stella, please. So basic rate will increase from 8.75 to 10.75. High rate 33.75 to 35.75. An additional rate remains the same at 39.35. The effect is really to bring the rates of tax more in line with personal tax rates and, of course, generate more tax revenues. You've still got that 500 tax-free on dividends. That remains unchanged. A new tax or a new tax rate is the tax on savings. So, at the moment, savings get to pay tax on whatever your normal tax rates are. Going forward from April 27, we'll have the basic rate will be increased by 2% from 20 to 22, high rate from 40 to 42, additional rate from 45 to 47, which, to be honest, doesn't give you much encouragement to save for your future. So you've still got some of the basic rate allowances in place as well, but they are getting eroded. We also have another new tax on property income. So they're carrying on with the measures from earlier budgets to target landlords. In the past, they've restricted the amount that you can deduct for your mortgage interest and what can you actually offset against the rental income. And we now have this special rate of tax for property income, which will be, basic rate will be 22, high rate 42, and additional rate 47. Remember in the budget last year that from April 25, holiday lets, which were always classed as a trade, are now classed the same as rental income. So they too will fall in this new regime. It might be worthwhile, if you're considering buying some buy-to-lets, either commercial or residential, to look at using a limited company moving forward, as the CT rate still remains as it was, and you can still offset the interest. Some of the allowances are a bit better as well. So that might be a way forward. It's getting more and more expensive to be a private landlord with this government. Inheritance tax. So it's the nil band's been frozen at 325 yet again till April 2031. There's a bit of a theme going with Rachel on this. It's actually been this level since 2009. And I think we would all accept that, the price of property, which mainly forms the bulk of people's wealth, has increased considerably since that time. Just by freezing this amount since 2009, last year alone, the inheritance tax receipts were up by 800 million in the year. And again, more and more people are being pulled into this tax. It's a very, very expensive tax. It's taxed at 40%. The government is also continuing with its plans to reform business property relief, which is a bit of a mouthful, I know, from the 6th of April 26. This is for business owners and farmers, despite all the protests by the farmers on Parliament. What this means, it's a bit of a strange word, business property relief, but what one's been able to do as a business owner in the past is transfer your shares on death to, your family, your spouse, etc., tax-free. It didn't form part of your estate. However, from April 26, it now forms part of your estate. There's still 100% income tax-free amount up to £1 million, so hopefully, most people are covered by that. But then after that, you only have a 50% relief instead of the present 100. So on a business valued at 2 million on death, after the 6th of April 26, it would cost you it wouldn't cost you, but it would cost your family 200,000 in inheritance tax, where at the moment it's nil. There's been some advice about, can people just pop their clogs a little bit sooner, but I don't think that's very wise. Remember, investment companies, a company which just has rental properties, does not qualify for business property relief. It will all be subject to inheritance tax. It's all part of your estate. The so-called mansion tax, again, another new tax, coming in April 28, is meant to be being collected by the council, but I believe it's going into a special fund. And it's a surcharge on properties over 2 mil. So it will be 2.5 to 7.5, depending on the property's value. It's on the homeowner, not the council taxpayer. So if it's a rental property, it's the landlord's cost. I know it affects more people down south than up north. We've got the lovely north-south divide, but it will impact for some people. VAT. So the threshold again remains frozen at 90,000. It was 85,000 from 2017 to March 24. And if it had kept pace with inflation, it would be nearer 120,000. But I think we all breathed a bit of sigh of relief. There was talk of the rates going up, and there was also talk of this threshold coming down to get it more in line with Making Tax Digital, which is coming in April. Just as within the frozen tax bands and thresholds, it has the effect of pulling more and more businesses into VAT. The flat rate scheme is still frozen at 150. So if your turnover is below 150, you can join. Once you're in, you can stay in until your turnover is 230,000. For the martial arts sector, you normally fall under the sport and recreation, and the flat rate is 8.5. You get a discount of 1% in the first year, and that remains unchanged. And the standard rate remains unchanged at 20%, thank goodness. It's always a hot topic with martial arts and causes concern and confusion, with a few people still seeming to be under the impression that they're exempt. You are only exempt if you meet the conditions as laid down by HMRC 701/45, which lists the sporting services which are exempt. But from January 2000, the exemption was restricted to supplies made by an eligible body. And the eligible body is must be not profit making, have in its constitution restrictions on distribution of profits, and not be part of a wider commercial undertaking. So whilst we've got some jitsu, judo, taekwondo, Chinese martial arts, karate are listed and dance as well are listed as being sporting services exempt, it's only if you're part of an eligible body. So you've got some conditions, and you have to meet all of the conditions. So your organisation engages in the activities listed. It supplies services that are closely linked with and essential to sport and physical education, and it supplies services to an individual. And it's an eligible body, which is the not-for-profit. So then you have 701. Oh, no, just wait a minute. Hello, we're not going on to capital allowances yet. 701/30 deals with the treatment of private tuition. You need to be a bit mindful on this one. Your income could be exempt because you're doing the teaching, but the income from your assistants or, other people that are teaching on your behalf could be classed as standard rate. You need to be very careful about this and make sure you've got the rules right, especially in view of the past with the VAT being introduced on private school fees. There's quite a lot of disruption in this area. That is a very, very strange set of rules. There was a case recently about marshmallows, of all things. Small marshmallows are classed as 0, rated because they're used in cooking. The medium ones that we might eat are VATable because you eat them with your fingers. And the big giant ones, which this was what the case was about, are classed as 0 because they're not typically eaten with your fingers and therefore classed as an ingredient. So it's amazing what HMRC get up to in their spare time with the tax barristers. I think there's one at the moment about a KFC dip and whether that's VATable or exempt. So it's good fun, but it might be worthwhile looking at that flat rate scheme. It is a very advantageous one for the martial arts, and it makes sure that you're safe and sound. Capital allowances. So yeah, the annual investment allowance remains at £1 million. I don't think any of you are going to invest in plant and machinery at over £1 million. The writing down allowance has been reduced from 18 to 14. So that's if you brought some kit, and we've been reducing it down every year. It's your tax allowance amount's going to go from 18 to 14, and they extended the first year allowance for electric vehicles and charging ports been extended. They're going to get us in April 28 with a surcharge on mileage, but there you go. To qualify for a first year allowance for electric vehicles, the company or you as a sole trader have to own the vehicle. It can't be on lease. And some of the private contracts, you've got to work out who is the owner. It's got to be a new vehicle or a demo with a low mileage, and the registered keeper is the main dealer. Just check and ask your accountant to check whether the terms of an agreement fall within the fact that you'll qualify for first year allowance if you're buying an electric vehicle to get some of your tax down. When I last bought my electric car, the car salesman tried to tell me the way he wanted to sell it me would class, and it certainly wouldn't. They'll tell you anything to make a sale. Get it checked. It's really important that it's checked, because you could lose an awful lot of first year allowance. The first year allowance means that if you buy something for 50k and you've made 50k's worth of profit, you'll actually pay no tax. So it's important to get it right. Limited liability partnerships. Quite a few accountants and lawyers were expecting substantial changes in this regime, especially around the treatment of the NIC. Quite a few had recently incorporated themselves from an LLP to a limited company. And whilst there was a sigh of relief from the lawyers and accountants, it is everyone's opinion that HMRC will start to enforce the salaried members rules, which were introduced back in 2014. These are where they look at whether someone has a control, whether they're paid a fixed amount, whether they've got an influence, and the capital contribution. If they fail as a salaried member, then their income, besides the fact you've got to pay them via PAYE and the revenue could reclaim some past years, their income would actually be classed, the income they generate for you would be classed as standard rate income, and standard rate VAT would have to be put on that, which would become a bit of a nightmare if you were also doing tuition. There is no exemption from VAT for an LLP undertaking a trade or profession with a view to making a profit. It's not the LLP that is giving you the exemption. It's the fact that within the LLP you can say someone is a member, and therefore they're sort of sole trader in their own right. I know a lot of people have been using LLPs to get around the VAT situation and saying, I'm running as an LLP, therefore I am exempt from VAT, and the Premier Family Martial Arts case doesn't affect me, as it was about kickboxing. But you do need to look at what the LLP exemption is relying on, as set out in 701/30 on private tuition. And it's only exempt if you are giving that private tuition, or you've got a member of your LLP that fulfills the rules of the conditions, and you can say that their tuition is also exempt. So you need to be careful. So you need to make sure that they really are a true partner of an LLP and are not a salaried member. And it is honestly thought this is where the revenue are going to start tightening up to get more taxes. Any tax or VAT liabilities of an LLP are considered to be personal debt by HMRC. They got their preferred status back as a creditor at the end of December 20, which means that VAT, PAYE, except employers NI, and personal tax is all your personal responsibility. They can, if you're in a LLP or a limited company, they can remove the cloak of limited liability and come after you personally for that debt. They have used it occasionally, but we can see a growing aggressiveness in this behaviour, and they are sort of getting more and more strict. They also have powers, which again, they've had for a long while, but they haven't used, to collect the monies directly from your personal bank account. So you really don't want to get this wrong. It might be safer to look at using the flat rate scheme or restructuring the business so that you're more in line with the tax bands and the VAT exemption amounts. Right. Additional matters. So, making tax digital is on target to be introduced from the 6th of April 26. This is one of the biggest changes in our tax system since the HMRC decided women weren't chattels of their husbands and can manage their own tax affairs. Independent taxation was only introduced in 1990, 72 years after women got the right to vote. They were a little bit backwards, the revenue. What this means, making tax digital, is everyone with an income from trade or property of over 50k, and it's a combined income. So if you've got 25 rental and 25 from tuition as martial arts, then you're going to fall in it, will need to submit quarterly returns electronically, similar to a profit and loss account, in June, September, December and March. The following year, April 27, it will be reduced to 30, and from April 28, income of over 20. So you are going to have to submit these quarterly returns, just as if you were VAT registered. Hence why we all thought that the VAT rate might come down to keep you in line. This, making tax digital, along with the Revenues Connect system, and the Connect system, they hold so much data on you. They spent £80 million on it back in 2015, and it really is Big Brother is watching you. What that means for you is you need to be very careful what you're reporting. What you wouldn't want to do is to have 3 quarters, of reporting where you're saying your profit is 20, 20, 20, and then the last quarter where you suddenly, I've made a loss of 30. Because if it's all going to be flagged, everything's going to be monitored, and it's not by people, it's by, the wonderful AI. And if you're showing that, steady, a great big drop, you're going to be in line for a tax investigation. They will be flagging those businesses that are showing sort of a 25k profit for 3 quarters, and then the last ones with a 50k loss. You need to be more aware of your quarterly figures and what you're reporting to the revenue. try and view each quarter as a little year end and make sure you're happy with it. Personally, I think the revenue are going to move to more quarterly pay, that you'll pay each quarter instead of the following year. As an SME, you are a bit of a prime target. You're an easy target for the revenue. The tax investigations in the SME market bring in good rates of returns for their efforts. It takes far too long and far too much money to fight the Amazons of the world. So just be careful what's going down. And bearing in mind, the bots are also going to measure for you to make sure that whether you should be VAT registered or not VAT registered. There isn't any real place to hide at the moment. And then other than that, corporation tax is staying the same at 19% for profits up to 50, and anything over 25k is anything over 50k is taxed at 25,000. So that's a pretty whistle-stop tour of the budget system and where things are going to impact upon yourself. More than happy to take some questions now, and if any of you want to discuss your own individual circumstances and concerns, more than happy to have a telephone call to discuss that with you. Have we got any questions?
Nothing else coming through at the moment from clients, but as and when they come through, I'll feed them over to you. Gerard, do you have any questions?
Not at the moment.
Okay. Oh, we do have a hand up. Let's see who that is. Andy, if you could type your question in the chat box. Unfortunately, it's a webinar, so we can't unmute you, I'm afraid. But if you want to type that in the chat box, then I will gladly read that over to Jenny. Ella, if we could stop sharing. That was great, Jenny. Thank you so much for that. That was really useful.
Yeah, I'm sorry it was all doom and gloom.
I mean, they normally are.
I didn't write it. I didn't write the budget. I have no responsibility for the budget.
I know there are a few things to be pleased about there, because it could be actually worse, couldn't it, Jenny?
Yes, I went down.
There is just one thing
I
might ask Jenny, is about these implications for making tax digital. And we're just wondering where we might be able to contribute to making that a little bit easier from the sales point of view. Are you actually suggesting that when they do this, you've got to get that digital return to a profit?
Well, not so much a profit, but what you need to be careful of is that you're not having that final period, December to March, where you're then going, oh my good night, I don't want to pay that much tax, let me bring all these expenses in. You need to have it more level than spiky.
Okay.
The system is so that the revenue I've got, this Connect system, it's so, you've got to be in awe, even though I don't like it. It's so amazing that it's capturing so much data. And if you've got 3 quarters which are, correct, for want of a better word, and then the 4th quarter you're trying to load it with expenses so you don't pay so much tax, you're going to show up like a Belisha beacon to the revenue. So try and even it out a little bit. The first year they're being a bit lenient, but not for long. Not for long. People need to get it right, and it's all electronic. Again, you sharing data just as if you're VAT reg.
Yeah. Perhaps the other question, Jenny, on the flat rate scheme, which we can see a number of clients now embracing VAT, the flat rate scheme, they're getting the 1% discount in the first year. But some of them appear to be tripping over what I call the low-cost operator rules. Do you see that in terms of purchases for resale?
Yes. You've got this upper limit. So once you're in it, you can be in it up to a turnover of 230,000. So it's 150's your to go in it, but once you're in and you've been accepted, you can stay there till your turnover's 230. You need to be looking at how you can structure the business and where maybe, have you got one pot and you've got every bit of income stream in there to try to mitigate that 230.
Yeah. I was just wondering, Jenny, whether or not they've made any changes in the small print to this idea that if you don't buy a certain volume of goods for resale, then the flat rate scheme, in this case of 8.5, might be much higher. And that was being looked at, I believe, on a quarterly basis.
Yeah, they've not. They've been very. There's not been many changes around flat rate. It's exactly the same as it was. The sports and recreation is what it's falling. We're having no trouble getting. You actually can ask the revenue to make a judgment call on it, and as long as you give them all the information. But they are holding to that 8.5.
Okay.
Jenny, we do have a couple of comments that have come through. So the first from Tim Watkins. He's put, "Hi Jenny, thanks for that. Not the greatest budget, but a lot better than it could have been.
Yes.
Thanks for helping us get ahead of the game. You've been great since we've been with you." And just pointing out there that apprenticeships are now 100% funded by the government, right?
Yes, but apprentice is only for 1 year. So you've got to be careful. And after that, you're then you've got the apprentice rate. So yes, they've got 100% funding.
Okay, perfect.
There's quite a lot in the budget. They stand up and they say the rhetoric, but we're still getting things released even now about how things are actually going to be implemented. So the tax impact notices are only just coming out. So, and they've had a good tidy up. They really have had a good tidy up. There's some weird and wonderful stuff that isn't relevant to this marketplace, but yeah, they've had a good tidy up.
They have. And we've had another question through from Andy. Did you say that there will be a reclassification on tax flexibility between a new electric commercial vehicle on HP? Does this vehicle now have to be purchased to qualify?
It's for 100% first year allowance. The company or the individual has to own it. That doesn't mean you have to purchase it outright. Hire purchase agreements are normally written that you're the keeper and the owner, but you've got a loan for it. But what I've found with some of the dealers is that they, with the PCPs, etc., is that you are not the owner, and then it fails. It can be buried right in the small print. We had a client sent something through a few weeks ago, and the dealer's telling them, yes, it's qualifying, but when you read the small print, they didn't own it. So it's not about the funding, it's about whose name and who's the owner.
Right. Yeah.
So you can have a bank loan, you can have HP, you can borrow the money from your mother or your father because they want to get rid of it for inheritance tax purposes, all of those sorts of things.
I get that, Jenny, with the capital allowances and so on. However, if people are leasing their electric cars through their business, do they still get the allowances? I know they're putting the 3p a mile and so forth.
Oh, in 2008, yeah. Yes, if you lease, then it's the leasing charge goes against your profit, but that's on a, as paid is paid. So, you'll only get, if you've had it all year, you'll only get 12. One of the good things about the first year allowance for the electric vehicles is if you buy a nice car, you can sometimes write off all your tax in one go.
Yeah.
Helps with cash flow. It's personal choice.
Okay.
Okay, great. Well, we don't have any other questions through yet. People might want to ask some questions as we're going along. So, Gerard, I know you wanted to talk a bit about, tying all that in and then how that.
I thought it might be just helpful to give some of our observations from 2025, which might be useful at this time of year where I'd like to say I'm absolutely sure everybody's put their budget to bed for 2026, but maybe not. And maybe considering it as a task for the Christmas holidays. But just looking at what happened last year, the economic climate was not great, whichever way we cut it. But we saw demand as still high. And so the number of agreements being processed here at Nest was high. But at the same time, we noticed a few other things. In particular, we noticed that around holiday times for young people, such as half terms and the full term holiday, we noticed suspensions rising, or the request for people suspending their direct debit was more than it had been in previous years. The holidays do appear to be now, to most of us, they seem to be a little longer than they were before and a little more irregular than they were historically by area, region, town. And we saw an average of something like 1,000 agreements being suspended around those times. Now, whether or not it would be possible for businesses to offer make-up lessons or alternatives rather than suspending their financial agreement or their direct debit is something down to the individual. But you should consider that more of that is going on right now. And that's a substantial loss to the business. The other thing is on acquisition of new students, we're seeing that conversion rates tend to be lower. So people are having to do more advertising. And particularly at the times I've just mentioned, those acquisition rates have gone down. And I know we could argue that it may well be that during those holiday times, people are less interested in certainly children's activities and signing up for them at the time. But we've also observed that at that time, the reaction from the industry is to lower their advertising. And you should really consider that carefully because it might be a time to just do the reverse. So check your spend on that. I don't want you to spend money you shouldn't be spending or indeed that won't bring benefit. But do make sure this is not a self-fulfilling prophecy that during those holiday times you don't get new clients, new students, simply because you're not advertising. If you add that to people who are going away on holiday at that time, it does mean there'll be a pretty big reduction in the acquisition of new students. And following on from that, what we've also observed this year is that conversion rates have been somewhat lower. At best, we see lead to booking and intro rates of about 50%. So we believe, and we've been working on systems to try and help with this, these are people who've booked appointments, who've showed interest, or what I would call a qualified lead, but only half of them are turning up. Now, as you probably know, those who work with us, that they get messages to remind them to come to this, and we're looking at how we might improve automations on that to make greater effort to help people to make sure that they remember their appointment and they do turn up. I know we've already issued ideas on videos and other things to help that turn up rate. But if you bear in mind, 50% turn up rate is much poorer than we used to recognise pre-COVID. Also, the sign-up rate, once they have turned up, again, is running at best at about 50%. Some people are doing better, but many doing less. So again, looking at your process for sale and your intro lesson and getting those students really fired up about the product that you've got on offer is very important. So moving on, the other thing we've noticed is around price. Very few people have been doing price increases and they've just been leaving it. And I think, Jenny, you've seen some of this in the accounts that your guys have been working on.
Yeah. It's with all of the impacts, from last budget and this budget, you need to look at your pricing. People haven't been putting their prices up. It's becoming unsustainable. You've got to do it.
Absolutely, and we agree. And what we see from just a global term, and remember, not everybody is doing any price increases at all, but we saw an increase in price of about 1.8%. And that includes those who do it and those who don't do it. So that is pretty poor when you consider inflation is over twice that. And so giving thought to it, I know you want the best possible deal for your customers, but at the same time, your costs are rising all the time. So again, look at that situation. And the observation from us when we look at price point analysis within different businesses is that there are so many price points, so many deals being done, and lowering rates, massive discounts for multiple children, and so forth. Not saying you should change the way you want to operate your business, but you should have a look at that and make sure that it all makes absolute sense and helps you to keep your business going with the price increase, not just relying on increased business from increased volume alone. Some people don't have the capacity for more volume, and while you've got inflation bearing down on you, the only place to go is movement in price. And I suppose finally, because I believe we'll be running out of time soon, is just a quick mention about preparation for 2026. Starting to think carefully about what your pricing should be. And if you do have fears on pricing, test it out. Look at your new customers coming in at a new price point and see what reaction you get. And then consider whether or not your existing customers can have price increases as well. We do a lot of them. There's a lot of automations in that, and there's plenty of help in the software to make the actual process as easy as it possibly can be. But looking through your budget, I think, is really important. And some of the key numbers for that are how many new students you can accommodate, what the conversion rates are that we just talked about, what your price is, and if you can open new locations, new lessons, where you've got capacity to do that, you can put that all into your budget. Many of you will be familiar with the budget tool that we've created, which you can download from MyMA. And that's just about to have a new version uploaded, which merely the only change to it is it will have some small changes to seasonal variation based on what we've observed last year in the holiday times that we just talked about. But that tool is there and it is available for you to use. And what I have said for many years now, and we do here at Nest, although our financial year is the calendar year, and I know your financial year in many cases is the tax year. But nonetheless, figuring out what you're going to do for January and that first quarter of the calendar year sets the scene for the year as a whole. And hitting the boards running when the market is hotter than at other times makes an awful lot of sense. And people do sign up for health and fitness, for things for their children, and for all the subjects that you deal with in January. So hitting the boards running very early, having your budget ready, your target for how many students you want to sign up, and so on, is so important. And we would encourage you to think hard about that. In the downtimes you might have during the Christmas holidays, when you want to change from the turkey and the Christmas pud, have a look at that. And if you need help between now and when we break up for Christmas, and you can't find the tools on the system or whatever, or need some help and guidance on how to use them, just give us a call. Let us know. And our customer service team and any of us will give you some assistance and help you with that. So you've got your goals in place for 2026. You've already got your measurement mechanisms in place to manage how you're doing towards those goals. So if anybody has any questions, happy to take them right now. I think we've got a few minutes left.
We've got a couple of minutes, which is good because we've got 2 more questions for Jenny. So Jenny, one question which came through was regarding the LLP format. Someone has asked, does this mean that the LLP format is no longer useful for martial arts businesses?
It really depends on your circumstances and who is doing the tuition. So if you're an owner, it's just you doing the tuition, then and you fulfill that criteria, you're fine. If you've got a trainee, an assistant, a chief instructor that you're using to deliver tuition, you need to look very carefully at those rules that were brought in 2014 and the conditions. They're very strict. And to be frank, from what we've seen, most people fail. They are coming, they are looking. It is an area that they are looking to tighten up. The revenue have had these rules in place on a lot of areas, and they've not had the resource to enforce. They got 5,000 new inspectors last year, and they weren't there to answer the helplines and help you. This is what they're doing.
Yeah,
Absolutely. Look, make sure you've got, it's paperwork. If you've got it all written down and you pass the tests and there is an argument, then at least the accountant can fight for you.
Yeah. So would you recommend anyone who does have any concerns around this or questions should consult their accountant?
Yes,
directly.
Please. Yeah, and get it in writing. We're very good at not putting anything in writing, or giving you 14 pages of advice and a disclaimer at the bottom. And a paragraph is the advice, and then 14 pages of disclaimer. Get it in writing.
Yeah, absolutely. And there was a follow-on question from Andy regarding the electric vehicles. Andy asked, and charging points for electrical vehicles will also go against profit?
Yes, that's correct. So you still get 100% capital allowances for installing a charging point.
Okay, perfect. And just finally, this might be one to ask your accountant in particular, but are there any changes if instructors are contracted as self-employed?
Not really. The lawyers and barristers, which is where the revenue are losing through the top law firms. They call them the magic circle. They're losing, I think it was about 10 million in national insurance by the way that they're being paid as members of an LLP. It's around the NI. They are all self-employed. They all fill in their own tax returns as self-employed. But the salaried, the conditions around whether someone is actually a true member doesn't take into account whether they're self-employed or not. It's around influence, control, a capital contribution. It doesn't say, all LLP people are self-employed, but that's not the criteria. So just because someone's self-employed, you can't go, I'm fine.
Yeah. So always best to check with your accountant.
Please do. And make them put it in writing and get
Make them put it in writing. Absolutely.
That's great advice.
Okay. Well, there aren't any more questions that have come through regarding that. So I think all has been answered and certainly highlighted in your excellent presentation. So, Jenny, thank you very much for coming online with us and producing that for our guys. I know you did that specifically for our guys in the martial arts world. So we do appreciate that. I think there'll be some kind of summary leaflet or pack as well that we're putting together, so we can distribute that to our guys. And any questions specifically that you can't ask your own accountant, we can pass on Jenny's details and you can reach out to Maple Accountancy for that.
Yeah, I also have, following on from what Gerard was saying, I also have a template that I can share with you that you can pass to your members about price increases and the impact, how much you've got to put it up before you lose. So that might be helpful.
Yeah,
absolutely.
Really helpful. Yeah.
We
do have this on replay. Someone has asked that a couple of times. Yeah, all of our webinars are available to our clients online through MyMA. They're also on YouTube for non-clients. So yeah, you're more than welcome to go back and rewatch this.
I wouldn't.
Lovely. I wouldn't.
Well, thank you so much, Jenny. I appreciate that.
Okay, thank you.
Thank you, Jenny. And thanks everyone for joining us. Thanks
Thank you
for joining us, guys.